Hello and welcome back to another video. Today's video I'm going to be discussing this EURUSD trade that I managed to take yesterday, evidently resulting in a 1 hour trade yielding me 2% on 2 of my accounts. Also going to be highlighting how I actually used the 10-year US government bonds and dollar index to actually add to the predictability of this EURUSD to the upside as a result of market participants' trading action. Let's firstly start off with our 10-year US bond. See that price actually traded above our previous daily high here. Now, from this point onwards, more likely than not, this is where we are going to see some sort of retracement. Now, up until this point here, this is where probability is in play. Just because probability is in play does not mean predictability of the next candles on a chosen time frame are going to be predictable. In this case, our participants' trading actions actually become predictable once we've seen this disrespecting of this daily fair value gap, or our imbalance actually present itself and get traded off to the downside, resulting in a candle close to lower prices. So from this point onwards, after the candle close, this is when price was predictable and probable it was going to trade lower. So this is what you want to be taking advantage of. Go into this in a little bit more depth on DXY. So very similar. We're actually trading in our weekly premium array here, sweeping some of our significant levels such as our yearly high. So this is where probability comes into play, as mentioned in our outlook, and why I actually posted the outlook in the first place. More likely than not, we are going to see a run for this weekly fair value gap. Exactly what happened. Now, just because I am going to see a run for this week's fair value gap, it doesn't mean I'm always going to execute. And that's down to predictability, which I'll go into a little bit more now. But that's briefly what I mentioned on 10-year bonds and how I actually use it to help me in my favour for confidence. Price action becomes predictable up until we actually disrespect this daily fair value gap as well. This can actually be shown on the chart as we can see a range of consolidation here. Now, not a single candle here is predictable. So that's what I'd be most going to stay away for. If I take a loss on something like this, it's just down to obviously the way I discretion range, and will be an error on my behalf. But all I'm trying to do is reduce that and, flawlessly execute at what I'm actually. Let's move on to what actually happened post the disrespect of this daily fair value gap as a result of our economic driver on Monday of Donald Trump getting into power. We actually got our 4-hour fair value gap left behind and this significant high. See buy side liquidity swept here. This point onwards, this is when I'll be eyeing up to get into EU-GU long and DXY actually targeting our weekly fair value gap as mentioned a week ago. Let's take a closer look at the actual execution on USD. So for me, I was looking to execute around and in this 4-hour imbalance, but where price actually offered a favourable ratio, so anything above 1R or 1R. Now, stop loss placement was actually below the significant low, as it was in line with DXY's significant high. And this is basically just where I would expect participants not to actually trade price above until we actually, reached this significant level, in this case, fair value gap. Now, let's focus on what's actually most likely going to happen now after this. Now, as mentioned, all a retracement profile is price trading opposing direction of our, weekly and greater picture. Now, I actually entered a GU trade. I'll highlight it very soon, but as an aim that DXY's low of the week is going to either be placed now or around this zone here below our weekly fair value gap, as the aim was just purely a retracement to balance and restore equilibrium within the market. So overall, I'm looking for this high to actually get targeted with our news drivers on Thursday, So we've got our unemployment claims, we've got our first President Trump speech, and Friday we've got a lot of drivers PMI as well. But this is where I'm going to be seeing, our distribution of price, our continuation of higher time. We highlight my execution on GU. See, I executed off this daily fair value gap here, anticipating this high not to be traded above, and my take profit to actually be this significant low here on our higher time frame. And obviously I'll manage this position accordingly to live actions that market participants take if we actually do end up trading higher here and it's Thursday and we're later on in the week. I'll look to execute, but if we're showing signs to trade lower here and we get our first news driver which shows price here, then I'll obviously hold my position and then look to cut my stop loss the price actually is traded lower to take profit. You actually have to remember as well, I'll highlight this quickly in this video, the reason why I took profit at the previous daily high is solely down to just to cash out what I'd actually made. Now remember this, if you're in your take profit and price is actually then trades back to break even, you've actually took a loss on your equity. So for me, holding on to this trade until we've reached some of our significant highs here, it wasn't very favourable, just for some extra. But overall, I do hope this video was helpful, and I obviously will pick upon participants' actions more in my Telegram group as the price goes on. But thank you very much for listening if you have made it up.